So
I want to touch on one more thing before we head out, though.
sure, I'm on your
Go
screen.
for it.
And it's about seasonality.
There it
I
is.
think that we're kind of at seasonal peak.
Ooh.
I think we're at the mid-February top-ish. So we're there's been an updated chart. Almanac Trader is great. I would follow. I'd recommend him. He does a lot of these election seasonal patterns, just seasonal patterns in general. So he has an updated chart of this, but I've added a little bit of notes that I noticed since he had posted this. So I think this is actually way above the typical percent change trend. Uh, this purplish pinkish line, but this cycle will be this green line, right? It's sitting president running. I would assume that this is getting pretty close to where we are, early February. And I think that we bottom, and I think it's going to line up pretty well with where Super Tuesday finally comes, where we pretty much know who the candidates are going to be, like who the nominees are going to be, because almost a heck boatload of um, the delegates get allocated on that day. So I think that's kind of a signal to the market. Okay, we know who our nominees are going to be, or heading into the convention. It's not really a race anymore. It's kind of set who the Republican and who the Democratic nominees are going to be, but we won't get so I think that that's probably where we begin to make a bottom uh, locally, and we probably kind of just mess around for the rest of May up and through mid-summer, where convention season opens. And the first one is the RNC, which is July 15th through July 18th, and then the Democratic National Convention is August 19th through the 22nd. So that lines up with both of these months. I think we finally begin to see a trend start to form again once we near conventions. And then I think that there's going to be another good opportunity to buy, make a bottom as we go into early voting and finally election day in early November, before the market doesn't have to worry or think about who the nominee is. We know who our next president is going to be. We know how the House and the Senate are going to shake up. So there's not a lot of things to price in and think about. That's kind of my thoughts on just election seasonal pattern. But I wanted to bring that up because I like this time I spent on this, and I think election season is going to be pretty interesting for trade opportunities, because a lot of people aren't willing to put their views on what party they would vote for at the door and just look at it from, like, there's tons of clean alpha available if you're willing to put in a little bit of time and follow some of the political ongoings. Like, well, my bread and butter before I knew how to chart things used to be just look at what bills were coming through committees and saying, okay, like example right now was the marijuana banking bill that was working through committees, and that ended up being around the bottom that all these cannabis tickers found a bottom. So things like that, or like the Inflation Reduction Act or the CHIPS Act. Obviously, if you were reading those bills, you knew where the money was going to go. It was going to go to Intel. It was going to go to TSM. Like you could have, if you were following some of those things early on, you would have caught on to it before the market realized what was going to happen. So I think a lot of people, I think there's so much alpha in politics if you're willing to just put your baggage at the door and not think about your political stance and views, and just look at it for there's money to be made here. And I think election season, electrical seasonal patterns are probably a really good example of that.
That's awesome.
Yeah,
Now,
thanks, Tom.
to hold
I think
you to those low comments, you're not talking market crashing lows. You're talking soft S&P
Yeah,
landings. What are you thinking?
so maybe if we're looking at this March, if we're looking at it from just the Fed's point of view, like, we probably understand out of the March FOMC where if we're actually going to get rate cuts in May, and maybe we get like what when we were, what did they call it? The taper tantrums of post 2008. Like we might get one more shakeout once we finally start to get cuts. I think in general, though, you should be looking at the market and the seasonal pattern from the election point of view. Don't think about it. Don't try to keep on comparing it to cutting cycles of the past. A lot of people do happen to ignore the soft landing that Greenspan was able to achieve in the late 80s and into the early 90s, mid 90s, and that coincided with the democratization of the internet and everybody using it and accessing it for the first time, and the growth that followed it. We could be experiencing that kind of similar scenario with AI. I don't think that's far-fetched to believe. So don't keep on trying to fight the trend and keep on trying to make comparisons to '08. Like '08 was an anomaly. It was the worst crash we ever experienced, and if we do experience another recession, another crash, like I honestly think that 2022, 2023, that was a recession by all means in my book. So we experienced one already, and the yield curve inversion, uninversion, reinversion, whatever the correct term is. There was a great interview, and I'm going to talk about two interviews real quick because it's from the same podcast. It's the Forward Guidance podcast by Blockworks. And in one of the interviews, it was the guy who came up with the idea of using the yield curve as a signal for an upcoming recession. Now, in the end of the last 5 minutes of the interview, the host says, "So how do you see the outlook for the next 6 months to a year?" And he said, "This is a great signal, and it probably will happen, but there's a lot of other signals that say that a recession would be shallow." It was his takeaway. There's just so much spending that's still happening. There's still so much of the what's left of the CHIPS Act and Inflation Reduction Act spending. Those things should keep the markets elevated enough that it would probably be shallow. He doesn't think it won't happen at all, but to expect 2008 again is people got to stop.
Yeah. No, I appreciate that. That's awesome.
The other interview, real quick, was Citrini, and Citrini it just came out. He was his bread and butter has been calling out the GL1P or GLP-1 trade, which is Ozempic and such, and the other one was AI. He was really quick to catching those trends and recognizing that we were in a bubble, and you want to catch a bubble early and ride it. You don't want to keep crying little Bo Peep or whatever, or crying around what's that chicken with his head chopped off or whatever. That it is a bubble and it's going to pop. You want to be with the bubble. You want to be with other people, and you want to be cautious, but you don't want to miss out on life-changing opportunity. And in the end of the interview, he also talked about the same points that I have about politics. Like, there's going to be so much alpha that's available to us. Especially a good example of this was when Trump recently this week on Truth Social posted about Budweiser being an American company. It's a great company. We deserve a second chance and such. There was a 5% candle within that hour after he posted that. Those opportunities happened so many times when Trump was president, tweeting all the time. You can grab a bunch of calls real quick and ride it and make a good turnout on a day in an hour that you typically wouldn't any other day that you trade. So I think that there's a bunch of alpha in politics that if you're willing to just not think about your political views and just look at it from our perspective, that you can make some good money.
That's awesome. Thank you.
That's all.